you guys, Jackie here. Welcome to our second day 2 of our live stream that we've been doing, our live stream challenge. And it's actually 5 days to mastering high yield real estate investments. So what I want to do real quick, I'm going to make sure that my volume is not too loud because I know some people have complained about the volume. So just give me a second. Let me make sure that it's not too loud. Yeah. So it's not showing up. But anyway, in case the audio is giving you some issues, just let me know. I think it's under Windows probably, isn't it? Let me bring out front so that I can see the Windows sound levels. That's it. I'm good. Yes. Awesome. I think our sound levels are perfect. Awesome. So good to have you guys on. And today, what I want to do, by the way, we're also going to be streaming this on Instagram. Why not? Let's do this. Well, I don't know if Instagram or Twitter would be a good one to stream to. You can do it from there. I have my handy assistant who's doing all that. So, hey Instagram peeps and hey Facebook peeps, we're all live today. And today, by the way, we're talking about some amazing stuff. I've got my notes here that I'm going to be taking you through. We're talking about the best ways to get financing in this day and age, right? The best financing options available on this day 2 of our live stream that we're doing, the best financing options available, and also how to make sure that you are getting the best rates out there. This is a huge deal for a lot of people, and also how to avoid overpaying on your mortgage. Yeah, this is something a lot of people fall into. It's a problem a lot of people fall into. And then finally, what's this important news that is going to mean it's going to be bad news for you if you haven't gotten your property up and running yet, or you haven't actually gotten financing yet. It's not going to be great news for you. So what I'm going to do is going to hold on to my phone right here so that if you guys have anything that you'd like to say during any comments and that kind of thing, I can be able to hear you through my phone. I hope that I'll be able to get the what do you call it, the session on properly. Let me actually try and do this. Hold on a second. Awesome. I got it here. So if you guys have comments, I'm going to be following them through here. And awesome. I think Adnan also typed in challenge to get something. I hope that you were able to be helped. Why is it not going through though? It seems that it's saying that it's going to start soon, but let me just make sure that we are indeed live. Can you guys actually see me and hear me? Let me know. We just need to confirm whether we're live on Facebook right now. All these things always happen. You know what I mean? Like, what do you do? If it works, it works. Because I thought that we did actually click on live. So if you're on right now, please do comment. Let me know if you can hear me or see me. And if we might need to just restart this live, we can always do that. Let me know, guys. Maybe we're not getting much feedback, but I do see that we have some people viewing. It's probably me. I'm one of the people viewing. Okay, so yeah, today those are the 3 things we're talking about. And just to let you know, a couple of housekeeping things before we get started. Number 1, if you have not joined in our viral giveaway, you need to do that ASAP. There's a link on the description, wherever the description is, where you can click and join in the viral giveaway. And that way, you'll be able to actually win yourself 5-day stay in Diani or in a destination of your choice if you're not in or coming to Kenya. Or if you're not Kenyan, for that matter. Then that's number 1. Number 2 is do share this once you sign up. Do share it with your friends. That's exactly how you get to win the giveaway. And we're giving you a really wonderful download. It's a PDF of top 60 plus tips from our 20 plus experts that we hosted during the first ever virtual Diaspora Homeownership Summit, so that when you download that PDF, you get premium content pretty much from what we had during our summit, right? It's never been released before, so make sure you head on over there. And the last thing is just, tell your friends about it, obviously. Tell your friends about it. Comment below if you have any questions. Stay tuned for tomorrow's session. I'll be actually going live every day this week at this exact time. So make sure when you see the notification come up, click on the reminder to get notifications, and you will be able to check in for our session that we're going to be having. Okay, great. Then next thing I guess that I want to tell you guys is that we are now getting set. Okay, now why financing? The reason that we'll talk about financing is that this is pretty much the top one, that top question we get from a lot of people with regards to how to get started with their real estate empire, or just how to get started with real estate in the first place. A lot of people are not able to get the type of property they would really desire to get just by paying cash. And so financing comes in as a very great partner. And we also share that, look, leverage financing. A really important thing that you need to do is leverage financing, because that way you're able to use the money that is being made available to you from banking partners, financing partners, and you're able to get so much more. Maybe if you pay cash, you get a property worth $6,000, $10,000. It really depends. But once you get financing, you can quadruple that multiplied by 5 or even 10x it. You know what I mean? And who wouldn't want that? Because the more you invest, the quicker the returns are that you will get. Okay, so that's the reason that obviously we're looking at financing. And there's a lot of things that are going on. You probably maybe you tried to get financing. You found out, oh my goodness, it is so expensive. I know right now that there are countries where financing is currently 26, 27%. Yeah, isn't that true? In Kenya, at the time, it was at least about 25, 26. 25, 22, 23, 25. Okay. And in some other countries, in Zimbabwe, it's also been about 22, 23, 24. And many of the countries in Africa that, our viewership, our community comes from, do have really high financing rates. And so it's easy to feel, oh my goodness, I'm overwhelmed. How exactly can I get this financing? How can I get a property with the expense that relates to getting the property? The truth is, if you're paying quarter of the property value every single year, it's going to be pretty hard for you to repay back your property and to actually get enough money, enough rental return to pay back your property. So this is the first place where you want to make your savings, with financing. So rather than being a person who's in and, there's probably a reason you've been sitting back and not doing anything about it so far. And the main reason is obviously, you've looked around, maybe seen financing is really expensive. And if you're like some of the members, if you're like most of our members, you also feel like banks maybe are out to get you, like, oh, I don't want to get a loan from a bank, because guess what? They keep shifting the goalposts. It's this, first I've paid this much, then I've paid that much. Actually, I'm not even feeling like my my principal is going down. That may be what you felt. Maybe you've had a bad experience in the past, right? So you really tell yourself, no, this one I'm not going to do. Another thing that may be holding you back is, you look around and you see exactly what your parents went through. They got a mortgage. And by the way, can I just say the term mortgage? It's actually meant to refer to, like, it's a French, it has a French root, right? Or Latin root. Mort is death, like mort is death. So it means you're tied till death. So you see that your parents get mortgages of 20, 30%, and they've been paying them off for years, and they've never paid them off, and you're like, am I really going to go down that road? So you're kind of like, you don't want to. So you're sitting back there. Or maybe another thing is you've gone into the bank. Hey, I see you, Joel. Good to have you on. The comments are actually coming through, so that's great. So keep them coming if you have any questions. So you've actually tried to, go and get financing from the bank, but the bank has turned your way because they're like, you don't qualify, or it's not going to happen. You're required, you don't meet the requirements, just to start off. So you're feeling so down in the dumps. You're like, what am I going to do? Well, first off, there's a lot of different options, right, that you can look at, right? And we're going to talk about those today. And I'm also going to be telling you what is the best option, if it is an available option to you. Okay, that's what we're going to be talking about today. So number one, let's talk about what are the available options for financing. Now we all know. And by the way, I'm living right now in a country where do you save? In your mattress, right? But traditionally, obviously, you've always saved with an institution. So we'll start off with the Savings and Credit Cooperative Society. This is one where, and people have different names for it. One could call it a merry-go-round. One could call it a communal. It could be anything. I know merry-go-round is in, like in Kenya. It could be a pool. Other people could call it a pool. I think in English they call it pool money with friends. This is the very, very start of the places where you can get finance. It's like at the very, how do you call it? It's at the foundational level of places where you can get financing. It's at the circles, right? Savings and credits, or saving and credit cooperative societies. This is the ones that I'm talking about. Sometimes it's at your workplace. Sometimes it's with a group of friends. Sometimes just something that's actually institutionalized. Like we have large savings and credit societies in a lot of African countries. There might be some where they're not as common, and so they're more informal, but this is something that from days old, I mean, we know about how our parents, maybe our moms particularly, for some reason, I don't know, it's always moms, they used to save up with their friends, and they would like be putting in an amount. Everyone puts in an amount every month, and then they go around the circle with who is meant to receive that money in the certain month. And that's how a lot of mothers took their kids through school, to be honest, right? And if you're not thinking that that's a savings and credit cooperative society, it is. So that's a start. That's a more informal kind, right? And that's a place to start, where a lot of people will start by pooling together their funds with friends or with other people. Now, as we go through each one, I'm gonna mention pros and cons, because of course, a pro with the savings and credit society or any kind of group of friends is that obviously you're keeping each other accountable. When you want to go far, you go together. When you want to do more, do it with a group, right? Now that's a large pro. Obviously, you don't get discouraged when you're feeling down. Someone else will lift you up. Now, a con about it is that you're more than one person, so obviously you're going to be making decisions a little slower than if you decided, oh, I'm up and going to invest in this thing. You would do it real quick. But if you did it with a group of people, what's going to happen? You're actually going to take you're going to take quite an amount of time in order to actually get going with it. You're probably going to have to convince this person and the other. And I have had people jump on a call with us to talk about, hey, I have a group of friends, we're investing, why don't we, what can we do? How can you help us? But the thing is, months later, they still haven't made any movement, because it's just that you are a group of friends, so you will move slower. That's just the fact of it, right? So that's one of them. That's one of the ways that you can get financing. Another one, of course, also informal, is getting it through loan sharks. And these are people who will charge even up to 20, 30, 40%, even 50, just to get money for a short period of time. A pro about it is that it's real quick. There's like really minimal, hey, do you meet this criteria or not? But a con is that it just won't give you the amount of money that you need, right? And it's the same con that comes with SACCOs as well, that you won't really get, like a savings society, you won't really get a good amount of money, because it's always limited to your and your friends' contribution. So it's good for developing that saving habit, but ultimately when you want to invest, you want to then look for people who will play in the big leagues like you. It might be that you will join up with people who are just like you, who are also going to be wanting to put down millions. So therefore, combined, you have quite a good amount of money in order to be able to invest. And when I talk about millions, it's in Kenyan shillings. So we're talking let me talk in US dollars. That will be like hundreds of thousands, no, tens of thousands probably. That will be tens of thousands. Yeah. So that's a loan shark. Now, the next way that we all know, and it's quite informal, is through family and friends. So obviously, there's really minimal requirements with that. It's more of maybe how much do your family and friends trust you? How much are they willing to give you? And I have raised funds through family and friends as well, and they've been able to God and trust us with a certain amount, and then we then helped to be able to deliver. Pros is that maybe you're not paying interest rate, you're getting this money in a much easier way. A con is that at the same time, it's very easy for your family member or friend to pull out of the deal. So of course it's important to get in place ways that you guys can actually make sure you're not gonna have less people. I mean, you're not gonna have come to a point where suddenly someone pulls out and now you're less than who you started off, or you get less amount than what you started off with in the beginning. Okay, so that's it. That's the informal ways of kind of borrowing. Of course, also credit savings societies have become quite formal, and now you have any number of savings societies you can walk into and get financing. Really good interest rates. If I talk about the Kenyan market, it starts from about 12% going to about 14, 15, really depends on which kind of savings society. The one limitation I found is the length of the term of your loan. For savings society, it will tend to be about 5 years, which means, how are you going to pay about $70,000 in 5 years, without really, really pushing yourselves? And so that, with the bank, you tend to have a longer period of time. So now here we are at the one of my favorite ways of financing, and it's actually the one that I would put to you as the best way of financing, which is bank financing. Yeah. Now, I'm going to explain why, by the way, this is one of the better ways. And also, I think in my next point, when I talk about how to avoid overpaying and this little trick that you can use, I'm going to explain more about that, how you can really leverage bank financing. Bank financing will not normally require you to put down a deposit, first of all. So you're only limited to how much you can get, to how much you can pay monthly, right? And that is a huge plus. A lot of people don't realize it, but it really helps you get to the cut to the chase with, okay, how much can I get? And then you can literally take that money to the bank. There's a reason he's that saying, can you take that money to the bank? In this case, the bank is the one who's giving you the telling you can. One trick that I have found that really is useful is get pre-approval. Okay? Just get pre-approval, guys. If you want to know what amount you can get, just walk into your bank, give them your paperwork, let them know you want to buy something, and get pre-approval so that you know this is how much you can get. If you're really wondering, if you're not sure what you can get, then this will really help you know the kind of budget you can work with. And this is exactly how we also teach our own clients. And from the start, they're working and getting pre-approval right from the start. So you're not working with some nebulous thing. Of course, it depends on what you're earning, right? So obviously, if you're earning 100,000 Kenya shillings or $1,000, you probably will, you might get something to the tune of 30,000 US dollars as a loan. But if you're earning twice that, then you can, pretty much double that to maybe 60,000 US dollars. I'm trying to calculate this in US dollars for our African, members, so that our members in the rest of Africa, so it's not just Kenyans we're speaking with right now. We have an international community, and we're just expanding in that sense to just really share this with everybody. So you want to be sure to make sure that you are making sure that you're getting a pre-approval to know how much you can get. And then the next thing obviously is just we want you to find the best rates out there, right? And I think that's one of the things I said that we would talk about. By the way, before I move on, so that you know that I'm also being balanced, is what is a con of the bank? I mean, what is something that's not that positive about a bank is that not everybody is going to be able to borrow from a bank. Now, usually this previous ways of financing will most likely be open to most people. They don't require as much. They're not as rigorous. But with a bank, most likely you need to be employed. Okay, you need to be earning a salary. If you're self-employed, you need to have, proof of income in terms of invoices or client contracts, that kind of thing. So not everybody is going to be able to get financing from a bank. Let's just say that straight up. And preferably, you should have had at least 2 years of credit history. Well, not credit history. Should have had 2 years of work, of employment, in order to be with the same organization or maybe a different one. But you should have had at least 2 years of contracts, in the sense of where you can see the bank can see that your employability. So that's one thing that I like to tell people. In case you're not able to meet those criteria, you know what? Your best bet is to look at the savings and credit societies. Okay? I'm just going to tell that to you straight, because one thing I found is that if you're not able, there's really basic criteria. You wouldn't walk into, I don't even know how to explain it. Like, you wouldn't walk into an exam without a pen, so you need a pen in order to do an exam. So don't walk into a bank without a job contract. It's just not going to work out very well. And it could be a client contract if you're a contractor or a self-employed person, like I mentioned. And once you have that set, then you're pretty much okay. It's now then about the discussions and about the amount that you can get. So that's what I want you guys to really focus on. And I want to make sure to not miss out what I promised for us to talk about, right? I'm just looking at my notes so that I make sure that I don't miss out anything. How to avoid, so what are the best rates? How do you make sure that you are getting the best rates for your financing? There's no secret formula to this one. There's really no secret formula. The only way you can really do it is to research, okay? Is to research. Now, I'm going to put it's called caveat emptor or whatever. I'm going to put a caveat there to say that the truth is, if you are researching in the dark, you're probably not going to find enough information that you need. You're not going to. And in the dark, by researching in the dark, I mean not knowing what is actually available. When we first wanted to get our property, we had no idea that there was a special kind of financing that was available to us as people living abroad. We had no idea until we bumped into this fact, right? So in the beginning, what we're doing is we were researching in the dark. So it was dark. We didn't have a searchlight, and we're groping around to try and find out. And I'm telling you, we wrote to tons of banks. And, some will get back to you in hours. Others will never get back. Others will get back to you maybe weeks, that kind of thing. But for the most part, I don't know why it is. And this is something probably our banking, friends can take back to their banks, that, be responsive, right? So that's another, if you're trying to research and banks are not responsive, you're pretty much never going to get the information you need. You can hardly find them on websites. Let me just let you know that. And then when you write into them, you very rarely get a response. And when you do, you probably have to follow up with them for like months or possibly, let me say, if you keep at it within a month or so, you probably have the information that you need. Now, if you multiply that by how many banks that you need to just research in order to find out, it's going to be so hard. There are people that will gather that information, like maybe some newspapers, and regularly we run features about that, which is great. They'll tell you this is the offerings that a bank has. I've never seen banks actually putting their available interest rate on their websites. To date, I actually have looked around to quite a number of banks, and they don't put it on the website. They just require you to reach out to them. If you can make a phone call, wonderful. But I'm going to tell you, I work with a lot of diaspora people, and this is the number one challenge they have. They have contacted banks, and they've never had back. They have tried to open an account, and they've been chasing it for months. They've just really, really tried their best, but they're just not getting the help that they need. So look at another way of doing it, by, instead of searching in the dark, searching with a flashlight. How would it feel if you were searching with a flashlight? You're in a dark room, and suddenly someone hands you a flashlight, right? And this is exactly what we encourage diaspora members to do. Like, look for that flashlight. In this case, look for that group, that people, that community where you can get guidance, where you can see who has gone before and who's been able to do what, right? Where you can see, this is what someone has been able to do, I should be able to do the same, right? So you're going into a room with a flashlight, you're going to find it you're going to find the information you need much, much better. Because guess what? With that same flashlight, someone else is going to be able to show you, hey, this is the bank I used. Why don't you guys actually use this bank, or these are the people who I was able to partner with. You can get this kind of, rate from them and that kind of thing, right? So that's a really critical one. Don't go searching without help, but rather you need to go searching with help. You need to know where you're looking. So another thing, how to make sure that you're getting the best rate. So that was it. It's mainly about doing the research and making sure, and more than that, having a flashlight. We now, after kissing many frogs in terms of banks, we're at a place where we have partners that we always work with that are just doing what needs to be done. Our clients are getting amazing insights, are getting amazing, just really assistance from them. Oh, you guys, give me a second because I don't want my power to go off. So we're just going to plug in the power cable on the computer before I don't want it to go off on us. And then we're not able to, get, okay. For some reason, it tells me that the scheduled time passed. Why is that, though? Yes, I am live. Oh, perfect. Good. I was just checking to see that you guys can actually hear me. So that's awesome. Yeah. Oh, I see. So there's a question. How can my job contract here be validated in Kenya? Okay, well, Joel, I hear your question. That's not a problem, by the way, just to respond, because I saw the question from Joel that how can my job contract be valid in where you're based, be validated in Kenya? The thing about it is, the bank has their way of doing their due diligence, right? They'll always require a letter from your employer. They'll also require a contact with your employer, whether it's a contact number, email, something that they can always check with the employer. Are you indeed employed? And ultimately, your payslip should also correspond to any money that's coming into your bank account. So those are not things you just make up. Trust me, they will do their due diligence. Okay, so you want to really, from the word go, have the right paperwork in place, and they will let you know what the correct paperwork is. Okay, so I want to make sure that I'm not losing my train of thought. Right? How you make sure you get the best rates? Like I said, make sure that you're researching, but don't research in the dark. Research with a searchlight. And now this actually brings me to the next point, which is how to avoid overpaying on your mortgage. Now, if you're working abroad, and this is really mainly for those people who are working abroad. You're back home, and are you aware? You might not know it, but there's a lot of diaspora financing that is now available, and it is normally in a foreign currency, and it is normally at almost half the going rate in whichever country you come from. Okay, so this is the one trick that I can share with you guys that will help you avoid overpaying on your mortgage. We have clients we work with who are paying much more. They were paying like at least 5 or 6% more than they knew that they could pay, right? Because they had researched back then, but guess what? They were researching in the dark. They didn't know. So now that they know, now that we were able to help them realize this, and now they've been able to save up to 5-6% off per annum off of their interest rate per annum. It's just crazy. And that easily translates. I think the last time I did a calculation with one of my clients, it translates to almost 400,000 Kenya shillings or 4,000 US dollars in a year and no more. Because this is just in 1 year, and if your loan term is like 10 years, that's almost 40,000 dollars, right? That you could have saved if only you had known, right? So I'm going to tell you guys right now that as a diaspora, you can look up for diaspora financing. Now, again, just gonna say this, it's not that easy. Try, you try it, you give it a try. It's not that easy to actually find the right place. And one thing I found that has made a big difference with being able to invest in real estate, time and time again, is having a partner. Having a financial partner that is not just a bank. I mean, there are banks, but having a bank partner that actually takes the time to walk through with you and let you know, this is what you can get, this is what you could do to improve your chances, this is what they're actually working side by side with you, this is what you could do to be able to pay this off faster, so they're a partner. And I think this is really key. I really want to emphasize this for you. You want to do this. Seriously, someone could tell you could save yourself 40,000 US dollars today. Wouldn't you do it? So that's what I would encourage you guys. Definitely look out for this particular way of avoiding overpaying on your mortgage by looking for diaspora financing, especially if you're earning in a foreign currency, and it could also be the local currency in your country. But the diaspora financing really does key off of the foreign currency rates, and you'd find, for example, in Zimbabwe, maybe some of you don't know it, but here there's diaspora financing from one of the local banks that's 9% interest rate per annum, and you can compare this with the local prevailing interest rate of 23%. It's just there's such a huge difference. It's such a huge difference. It's going to make a big difference for you guys just to do that. Now, the next thing that I wanted to talk about is obviously, what is that thing we mentioned? That's going to mean a lot of problems for you if you're not yet, not yet got your property. This is specifically for the Kenyan market. There's been this rate cap that has been in operation. It must be going on 2 years now, where banks could not charge more than 4% above the base rate in Kenya set by the central bank, and that meant they had to be at about 14%, and now it just went down to 13.5%. That rate cap is actually going to go away this September, because the IMF has now put stringent requirements on the government to remove that rate cap in order to be able to access some certain funds that the IMF provides for the development of the country. Now, it's very possible that this rate cap is going away in September, so it means banks can easily start to charge up to 18%, 19%, 20%, right? They will have a discretion to be able to do that. What does this mean for you? If you wanted to buy a property, it means you need to buy this property right now. That's what it means. It means do not wait another day. It means that you need to be at a place where, and I did these calculations earlier today with one of the people that, one of the diaspora members that jumped on a call with me. Let's say that you get a 10 million Kenya shilling loan, which is, about $100,000, right? And if you get it at the prevailing interest rate in Kenya, which is 13.5%, the monthly repayments for a 10-year term, as we calculated, is going to be about 152,000 Kenya shillings monthly. Or that's actually 152 is at $1,500 monthly. That would be $1,500 monthly. Now, the minute that the rate cap is taken off, and then the interest rates go up to 18%, we notice that what's going to happen with the monthly repayment, it'll be topped up by about $400, give or take, right? About $400 per month extra. Okay, so that means the repayment is going to it would be then after that heading to about $1,800 monthly. So this was the thing. This is what I want to really emphasize to you guys. If you have a property that is earning you 2,000 US dollars monthly in rental income, is that extra $400 of interest rate really going to make a big difference to you? I mean, of repayment, the monthly repayment. Is that extra 400 really going to make that much of a difference? It won't. The truth is, you will be even making more than that from your property. And so the way to do it, get in at this low interest rate, and it's a variable interest rate. It changes, obviously. So in 6 months, it could go up. Get in now and get your property into a high yield model. By the way, I'm going to explain the high yield model in depth tomorrow, right? I'm going to talk about the exact model that will help you get that $2,000 monthly, okay? We'll talk about it so that you can actually see the numbers behind this system. So what's going to happen is once you get your property within 2 to 6 months, right? Get your property earning you $2,000 monthly. The extra interest rate will be like, oh, that's fine. That's not a problem. You'll be like, woohoo, no worries at all. So that's what I would urge you guys to do. Do not wait. You're going to feel that pinch if you wait anymore, and you're going to feel that pinch down in, and this is not even a diaspora loan, by the way. The rate I'm talking about is actually a local Kenyan shilling loan. And for different countries, for example, currently I think in Zimbabwe, the interest rate is about 22% or something like that. I'd have to confirm that. And in various other African countries, we have different interest rates going on. But the truth is, the more you wait, the farther away your dream comes. So you're better off starting now and getting your high yield model going. And stay tuned, because tomorrow we're talking about exact way that you can implement a strategy like this, for high yield. And we're going to be looking at real case studies. And by the way, after on Wednesday, I share the exact figures we have been running in our property so that you can know it's possible using real life example. Okay, so that's it, guys. If there's any questions, what I'm going to do, I'm actually trying to check out if there's any more questions. I think so far that's it. I hope I've answered all your queries. If you have any more, put them in the comments below. I will come in and respond to those, and just let me know, what is it that you feel inspired to do. And just to let you know, there is a different way. Okay, you don't have to grope around in the dark. You don't have to be overpaying on interest. You don't even have to be, banks, the different banks are better partners than others, okay? So you don't have to kiss all those different frogs and wait 6 months in order to get to the place you want to be. It's as simple as jumping on a call with me or my team, right? The link is below. Jump on a call with me or my team anytime this week. We've opened up our days to speak with you guys. Jump on a call for 1 hour. And we're going to lay out the exact strategy that you need in order to, number one, get the financing, what you can actually qualify for. We'll let you know, by the way, what you can actually qualify for just based on your numbers, okay? And it's a pretty good estimate, I must admit, even if I say so myself. And then the next thing we're going to do is find out what kind of property can you get based on that. And then the next thing we're going to do is then show you this is the kind of return you can get, right? And if you already own a property, maybe what we need to do is find out, how do we actually monetize that property? How can you monetize it to get it earning for you and paying back itself? Because like I spoke about on the day one, the first thing you want to look at when you're deciding to buy a property, does it pay for itself? If it doesn't pay for itself, why are you digging yourself into a hole? So really great to connect with you guys. I really look forward to the session we'll have tomorrow. We're going to put a reminder up. Make sure that you come in there, click notifications, put down your comments underneath that. And more than that, book a call. Book a call with us. If anything that I have said has really resonated with you, if you felt like you're walking in the dark every single day and that you don't even have a way to know whether what you're getting is correct or not, if you don't have a way to know, am I on the right track, and you just want to skip the line, zoom past the crowds, and just come in through the VIP, through the VIP gate over there, where we're pulling aside those things that have held you back and letting you in, I'm going to invite you to book a call. Go to jacquelinetsuma.com/book. We're also going to put a link below and choose a time that works for you for us to talk. We're going to call you then, and we're going to spend an hour completely free, just giving you all the insights that you need, right? And just to say, if you love what we're doing and you want to work together, we'll explore that too. But if we cannot help you, we will be honest about that. And we're going to let you know. If we can't help you, it's going to be like, look, you know what? We are so glad. We're going to serve you. We're going to give you everything we've got. Just let you know this is exactly what you can do. And we're also going to steer you to someone that can help you. Okay? So I really look forward to chatting with you guys. I really enjoy hanging out with you guys like this live. Woo, I'm actually excited because my live stream worked today. It didn't work yesterday. But do reach out. Let's talk again. Bye-bye.